Before we start today's podcast, we're just going to discuss our sponsor, Quartr. Quartr is a new way of doing company research. Their first mission is to enable access to conference calls, investor presentations, transcripts, and earnings reports as frictionless as possible straight to your pocket. Their second mission is to create a completely new way for companies to reach their investors and vice versa, to change the way that people look at investor relations. Their initial core product is now available on both iOS and Android, but stay tuned for additional features during the coming year. Quartr is 100% free. They include companies from 15 markets today and plan to add more during the year. They prioritize requested companies, which you can easily do in the app. They have a lot more in store for the back half of the year, so make sure to go follow them on Twitter at Quartr_app. Sorry, that's at QUARTR_APP. Again, that's at QUARTR_APP. That's Quartr with no E. And let's go back to talking with Adam. Welcome back to the Money Under the Mattress podcast. My name is Mitch, and my co-host is Jake. And today we are joined by Adam Mead, the author of The Complete Financial History of Berkshire Hathaway. Adam's book is a great resource for any Berkshire owner, and we recommend the book to all of the time to our peers. So we're excited to sit down with him today and discuss Berkshire Hathaway as well as how he started in investing. So thank you for coming on today.
Great to be here. Thanks for having me.
We're really excited to have you on today because, I know personally that I've watched a few podcasts from you and I've read the book over twice, as I've already discussed with you personally. I have it right here, actually. I'm going through it a third time, actually, as we speak. So it's one of those books that every time you read over again, you pick up something different and new and interesting. So we're definitely excited to have you on today. The first question that we usually ask our guests when we have them on is how/when did you get into investing, or how did you get into investing initially?
Sure. So I guess the sort of straight answer is the day after I turned 18, I went out and opened a brokerage account. So I've just, that's been, almost closing on 20 years here. But I was always around business my whole life. So that's when I strictly sort of started, I was actually able to buy shares myself. But even before that, I grew up in a family of small business owners. I actually cut and sold firewood during high school. I had a little welding business during college. And so business has always been around me. And then actually when I was, probably 14, 15, my grandmother gave my siblings and I think it was 25 shares of what was SBC. And so it just kind of all started to come together. And so this background in business more generally, and then just sort of an interest specifically in the stock market, at age 18. And then it's just been off to the races ever since.
What made you get interested in value investing?
I think it's kind of just one of those things where it just clicked. Anybody, you guys know, it's like anybody in business and specifically in investing, eventually you're going to hit Warren Buffett, right? And I was lucky enough to find him early on, and it just clicked. Kind of like he said when he read Ben Graham for the first time, like the scales just fell from his eyes, and it's like it just made total sense to me. And I think I was helped by the fact, again, that I had this background in family business and running businesses myself, where it just totally made sense. There was no confusion to me, I guess, in terms of a stock equaling a business. And, which kind of led to, I wouldn't say trouble, but, when I went to college, all this theory, it really helped me. But at the same time, I'd take a corporate finance class and we'd spend, a week like leveraging and deleveraging beta and it just that I could quickly see that was too mathy, if you will. And that Buffett and Munger were in fact, really telling the truth. And so you got to understand where everybody's coming from, but it really just clicked for me. And it doesn't for everybody, but I like teaching people about it, just like you guys, educating everybody on it. I think everybody's smart enough to understand it. It's just whether you have an interest in the time to actually do it.
Yeah, exactly. Yeah. I mean, a lot of our peers, I mean, as I'm 20 and Jake's 21, a lot of our peers are starting to get into investing. And they gotta get, I guess, sidetracked possibly, or maybe, I mean, they have interest in cryptocurrencies or whatever the newest thing is, NFTs and stuff like that. And so they're always asking like, okay, like what's the next cryptocurrency? And I'm like, I'm just looking at, I'm looking at Seritage growth properties. Like it's value investing. So I'll talk to them about like value investing. I'll give them, and I'll send them a copy of something about Warren Buffett that he's written up and stuff like that. And no, they make it through about half a page and they're like, okay, this is not interesting anymore.
It just doesn't click. There's just something there for some people.
It does. Once it does, though, it's quite the experience once it does.
And so when you initially started investing, when you said you were 18, Adam, were you initially investing in value businesses or value investments, sorry? Or did you kind of get sucked into different ways of investing that possibly weren't the best for you?
Yeah, no. And I was going to say, even, Jake, that comment, once they get it, it clicks. I think to a large extent, you have to go through your own evolution and make those mistakes. And, I always tell people, start with something, start with $1,000. You got to have something meaningful in the game and make these mistakes. Because just like the compounding of your money is exponential, the compounding of your learning is the same way. And fortunately, if you make the mistakes early, you can say, it's really exponential because you're saving the mistake in the future, and in the future you have more money to work with generally. I keep a log. Actually, I've dubbed it the folly gallery. So I've gone through this whole to basically use Charlie Munger's notion of rubbing your nose in your own mistakes. And so I've gone through this whole sort of typical evolution. And so I turned 18 in 2004. So open up an account. So this was right before that peak of, the 08, 09 bubble. And I did the classic. I mean, I went through the classic sort of just mistakes, right? Like being way too quantitative, overemphasizing, say, the importance of the dividend. Like I should pull this file up, but I think it was called, well, I guess the specific name isn't important, but it was a mortgage REIT in 07, 08. And I said, oh my gosh, look at this. The dividend yields 7 or 8%. I wasn't smart enough to look deeper and say, does this company have the actual ability to pay the dividend? And of course, the yield was so high because the computers didn't reflect the fact that the dividend was just about to get cut, and it only showed the price going down, but not. So I've speculated over time in, I think at one point I thought inflation was going to be high, so I bought a gold ETF. I played around with shorting a couple of things. Like I've gone through this whole evolution of making these mistakes. Fortunately, they've been pretty modest, and I've learned a lot from them. So this is just my mistakes, right? This is not all the other mistakes that I've learned from Buffett and Munger and other people. But when it really hurts, it really sears it in. And I'd recommend that everybody keep a log, whatever you want to call it, but just regularly review it and try to make sure you don't make those same mistakes twice. I mean, I even fell into one fairly recent one, which is almost 10 years ago now here. Horsehead Holdings, Zinc. You guys might be familiar with this.
Yes.
So, which
with Monish.
I actually wrote Monish a letter and thanked him. What went wrong with that investment, and you guys know, but it was just sort of classic. Like they needed a whole bunch of processes to go right to extract this zinc. And, if you have a 99% chance over, multiple steps, that overall chance of success diminishes quite rapidly. And then on top of that, they had borrowed money, just all these things. And then my mind had kind of clicked, when I see Monish, I see Guy buying this thing. And it was like, my mind just kind of shut off, just all kinds of mistakes there. But I wrote Modish a letter actually afterwards. I thanked him for the fact that I lost a bunch, all of the money of this investment, and it really just seared it in. But you continue to make dumb mistakes as you go along. But and that's even coming from someone who studied Berkshire Hathaway, and as you know, Mitch, going through now for the third time in the book, Berkshire Hathaway, Mid-American Energy actually had an investment in a zinc recovery facility, which they ultimately ended up writing off. So even if you've studied history, it doesn't make you immune to these types of mistakes. So you really got to be careful.
Yeah, I mean, for me personally, I've made multiple mistakes already, and I've only been investing I've been investing since I was 13, so the last 7 years, but technically I've only been investing in actual businesses instead of like ETFs or a mutual fund for the last couple of years now. And my first investment, I put 100% of my net worth into it. I was still in high school, and I just used my father's account. And I bought a little cannabis business that's just a couple minutes away from our house, and they were leveraged to the wazoo, and the manager was issuing shares, like just diluting anything and just giving management like insane compensations. And so I just lost all of it. And then that initially hurt me. And I was like, okay, well, I got to learn how exactly I can change my mindset and be like, okay, well, why is that happening, and stuff like that. So I find, the mistakes are the best learning lessons, especially from learning from Buffett and Munger, whatever their mistakes were in the past, or any other super investor, that you see on Data Roam or whatever, or even Twitter. But yeah, especially if it's your own mistake, then it's the best learning lesson that I think anybody can get. And it's a really good investment, honestly, even though you do lose the money. It's definitely something that makes you more interested in learning how to change your mindset.
I think what would have been worse is if you would have actually pulled off the investment, and then you would have thought that you could do it again and again, right?
Yeah, I think through since I've started investing, I'm happy to have lost money initially on like the first investments, because I think a lot of people nowadays, if they're initially investing, let's say if there's $1,000 into Dogecoin, possibly, then they think that, they really understand how it works or whatever it is. And then they could get just sucked away on their next investment because they think that this next cryptocurrency or next stock is the next thing, right? But what has been your main influence in your career, Adam, other than, I guess, Buffett and Munger?
Yeah, it's a great question. I'll answer this a couple ways. I'll talk about some specific investors, and then I was just going to make the comment as it relates to the last question here, what we were just talking about. I was fortunate enough. I had a decade career in commercial lending, and so I again, just from this evolution of actually running and being around businesses myself to then lending to them, that was a big influence in my career, because it was this risk first mentality where I was lending to a lot of smaller businesses, but some medium-sized ones as well, and interacting with management and seeing how they made decisions in terms of what equipment to buy, or and a lot of it's so much different than what the textbooks will tell you. And a lot of it, Buffett has kind of touched on this. It's like, at some point you have a really good business, or, your customers are demanding something. You're not going to put together an elaborate spreadsheet. You're going to say, I need this piece of equipment. And I mean, things are so much different in the real world than they are in the textbook. But starting with this risk first mentality, I think gave me, I was really lucky. And again, when I started this career in commercial lending 3 weeks before prime hit 3.25 in 2008. And so I was fortunate enough to go through this series of really tough banking decisions. Do you pull the plug on a business? Do you lend them more money? How do you secure your loan? Working out businesses. And I didn't make these initial credit decisions, but I was able to be involved in the workout of them in 08, 09, and then the aftermath. So that really shaped me. And so that mentality is probably just translated into the investment world, more closely related to, say, Seth Klarman, who takes a risk first approach, or or a Howard Marks, who's a credit guy, but takes that mentality into the equity space. So I think if you can train yourself to look to act and think more like a credit analyst first, and look at the downside risk first and what you can lose, that really helps. It really helps with what Buffett and Munger say about kicking things into the too hard pile. I mean, if you don't, I was just talking to somebody last week, another young guy like you guys, um, threw 10 names at me, and I'm like, nope. I mean, it really is a great way of filtering things. But just to kind of continue to move on to the value investing space, other than Buffett and Munger, one person I think really everybody in the value investing community should really latch on to is Bruce Greenwald. So Bruce teaches the class, I think, that Ben Graham taught originally, that Buffett was in. I mean, guys like Todd Combs went through there. Lee Lu went through his class. I mean, it really is. And many of these are available on YouTube for free, it's just incredible. But I've got it. I'm literally just going through it again here. Value Investing from Graham to Buffett and Beyond. They just came out with a second edition. It's phenomenal. I kind of liken it to if Buffett had put his formulas forward. Have you guys read this book? I mean,
I read
incredible.
volume 1, or like the first one that came out. I haven't read the second one yet. No. Highly.
I mean, you gotta read it. It just the update of it. I mean, a lot of it's kind of the same, but he updates it. One, for coming 20 years in the future, I guess, but also two, he has a way of looking at growth companies from the Graham Dodd mindset. I think is very, very helpful. And then his other book, I've got actually a couple of copies behind me on my shelf here, Competition Demystified, which really just strikes at the heart of what makes a competitive advantage. And you guys know, you read about companies, listen to management, every single one of them says they have a competitive advantage. Very, very few actually do. But Bruce, you read Bruce, and he's like, that's okay. You just need to sort of calibrate your thinking for what this business actually is from an economic standpoint, which average is okay. You just need to take that into your analysis. So those two guys, and then just another quick one here, Pat Dorsey has kind of talked about very, very much along the same lines. Pat helped start Morningstar's research division when it was in its early days, hired, I think, up to 100 analysts at one point before he ended up leaving. But Pat's general notion of, looking at the universe from the standpoint of true competitive advantage, but also taking more of a broad view, not only of industries, but within industries, the competitors in that industry. And that is so important for you to be able to compare and contrast businesses across the economic landscape, and then within certain niches to really be able to determine what gives them a competitive advantage.
Yeah, but yeah, I've read up a little bit about Pat Dorsey, and you have a little more than I have, Jake, on Pat Dorsey.
A little bit. I've listened to his Google Talks and stuff.
Yeah, I find the Google Talks of anybody really helpful. But yeah, that's how I kind of got introduced to Pat Dorsey initially. Probably about a year ago now, maybe a year and a half ago, and he's definitely super interesting. And then Bruce Greenwald has, give or take, maybe a dozen like lectures just on YouTube from what I've seen over the last couple months that I've been looking more into him. I'll definitely have to pick up that book that you recommended.
Yeah, and he pretty much Competition Demystified. That one's really good. He has another one, I think it's called Media Moguls. He's talking about the media industry. But there's a great, if you just Google, I think it's All Strategy is Local. It's like a 2005 article that he wrote. It's a great primer to what you're going to expect in his other books. Just really, again, it just clicks. I'd easily put Bruce in the top 5 most important and favorite investors of mine. So definitely check them out.
So As you know, this last Berkshire Hathaway annual meeting, Munger kind of slipped up and he said that Greg was going to be the CEO. So do you think that's going to have like an impact on them doing any big acquisitions once Greg becomes a CEO?
In what way? I mean, is it meaning the ability to, or just the deal flow, or both?
Yeah, like obviously Buffett's been he's obviously one of a kind, right? Where we don't really know much about if Greg will be able to make a lot of big decisions outside of the energy field, right?
Yeah, I guess a couple things there. Greg, I think, it's tough because Greg, if you just shined a light on him outside of Buffett and Munger, would be one of the top. I mean, he is a world-class executive. He just happens to be standing next to, two extremely bright sons, of Munger and Buffett. So the comparison is often tough. But I think the way, I mean, it could even happen tomorrow, right? Not Buffett and Munger leaving, but in terms of Greg bringing forth an acquisition, I think the sort of other element there, Jake, is Todd and Ted, because Greg's not just going to say, "Hey, I found this $10 billion acquisition." He's going to run that by Todd and Ted and run it through their minds, certainly. So I would be surprised if if again, I just throw out 10 billion, but even if it's a $25 billion acquisition, Greg, I think, will still operate with the same, I guess, call it level of autonomy that Buffett does. I mean, if Buffett says, "Hey, we're going to do this," it obviously is going to need the board ratification. But I mean, how many times does it ever not happen? I mean, he's going to do it. I suspect the history that Greg has within Berkshire and proving himself to the board, that if something comes up and Greg says, you have Berkshire's, handshake, basically, that this is going to get done, it will get done. Because again, I think he will have vetted it through those channels internally. But I think the board has confidence, and me, myself as a shareholder, I would have confidence that he could do that as well. So I think people will be kind of surprised at how this culture, how things operate currently, how that continues post Buffett, post Munger.
Interesting. Do you ever see that there could be any additional outsiders coming into the board once, Buffett and Munger do leave, and there's a new CEO that comes in? Do you see possibly like a Li Lu coming into Berkshire Hathaway? Me and Jake have always speculated that Li Lu could kind of come in, or maybe they've talked to him about it before. But do you think that'd be an interest of Greg Abel and Ajit for Li Lu?
Yeah, it's an interesting notion. Yeah, I mean, if you just pull up the proxy, Berkshire's proxy, I mean, the average age of that board, I mean, is I haven't done the math, but it's got to be mid to high 80s probably. Yeah, and another, it could be Li Lu. I mean, that might complicate things for Li Lu in terms of maybe his operations at Himalaya. But I mean, you have others on the board that have investment practices, so maybe that wouldn't be as big of a consideration. But the other element could be someone like a Tony Nicely, who ran Geico for a long time. Some of these founder CEOs of some of the subsidiaries might find a spot on the Berkshire board because I think an outsider would have to have a level, almost a higher threshold. I don't know if that's the right way to put it. I mean, they brought on Ken Chenault, who was certainly well proven executive at American Express. I'm just sort of thinking about who internally at Berkshire. I mean, some of these managers have been around for a long, long time, and they might be good candidates for the Berkshire board post Buffett, post Munger, I mean, I guess, that whole, I mean, look at, Tom Murphy, I think, is in his mid 90s, and, a lot of these guys are getting up there on age. So, but that would be a great question, guys, to ask Warren and Charlie. Get that to Becky for next year, and try to ask it at the annual meeting. Like, we've heard a lot about now about CEO succession, but what about board succession? What does that look like? How is that being crafted, or Buffett's thoughts on that? That'd be a great question.
Yeah, we'll have to maybe ask Becky that one. Do you want to discuss a little bit about your newsletter, the Watchlist? If maybe mistake's called the Watchlist Investing newsletter. Is that correct?
Yeah, that's right. So I started that as sort of an offshoot to my main activity of so I operate, I run money. I have separate accounts, Mead Capital Management. But I was looking for a way to kind of just expand what I was doing, and I found that having a network of people, friends and everything, has really helped me on the investment side. And so I'm basically, with watchlistinvesting.com, I'm putting out a lot of the research that I'm doing already for Mead Capital, but it's also I found that it brings in a lot of good ideas, good discussions. And the whole sort of genesis of watchlist investing is finding these good companies. It doesn't work for everybody, but my personal strategy and philosophy is, it's hard enough to find these good companies, but to find them and have them be undervalued is even tougher. That's a whole other element that you have to do. So watchlist investing is building a watch list of great businesses and then just following them over time and waiting for them to go on sale. So I've found personally that if I can understand a business, understand the management, look at its history over time, its capital allocation decisions over time, and again, put this out there to readers, that's another benefit that every subscriber gets, is sort of this network effect of, people poking holes in it. And as you guys know, people aren't shy about giving their opinions on investments. So it's a little bit different of a take, but it takes out that time element. And so that's been going for about 6 months now. I do put out a free Substack newsletter, generally every Friday. And then I have a paid version, for $100 a year, basically $8 a month. I put out generally, an idea. Sometimes, like last month, I looked at the waste management industry, which, again, case in point, wildly overvalued, but great to know this industry, right? So that's what I'm kind of hoping to bring to this community. And if I haven't already, I'll have to shoot you guys some of the first issues so you can take a look at them.
That'd be great to look at.
When you're actively searching for new investments, do you have any particular strategy on how to do that?
It's kind of the shotgun approach, I guess. And a lot of it is kind of just keeping your antennas up, right? I mean, it kind of depends on what's currently on my plate. I mean, I'll run screens. I'll do those kind of sort of traditional things. I'll look at 13Fs. I mean, that's another great way of seeing what's out there, see what other people have actually bought, right? I mean, that's a whole other level of, not just talking about it, but actually putting real money behind it. And then, again, I think back to when I was in banking. We would lend to businesses, operating businesses, so they'd have accounts receivable lists, right? And we'd look at that and say, well, geez, this looks like an interesting business. Maybe we can talk to them. So just kind of using wherever you end up or wherever you are currently, looking at the competitors to that business, looking at the suppliers to that business. Oftentimes in the proxies, they'll have their comparable, their peer group, and sometimes it might be outside of that industry. And then just keeping your antennas up, even just sort of in everyday life, right? I mean, how many of your friends or your parents or your parents' friends, they might be in a particular business, or maybe they're in manufacturing, and they say, geez, we'd love to switch from this part supplier or this particular vendor, but we can't, even though they raise their, like, you can kind of start to calibrate your antenna to pick up these things that are all around you. I mean, just, pick up something and say, geez, who made this? I mean, I just find that there's ideas everywhere, right? But not a lot of them fall through, right? They go into that too hard pile. But I think the more that you can broaden your horizon and sort of just start to understand how the world works, and even just ask these questions like, well, geez, this particular business is operating in, like, I'm looking at the beer industry right now. Why doesn't Coca-Cola go into the alcoholic beverage business? Well, geez, there's something there's something, at least in the United States, it's called the 3-tier system, where you have to sell alcohol through a third-party distributor, which sort of negates the benefit of having this Coca-Cola's, wonderful worldwide distribution system. So all these kind of weird little questions, like, well, why doesn't this happen, or why doesn't this business step on this other one, are great questions to ask. And then just kind of, set yourself the task of going and investigating it, and you'll learn a lot from it.
Are you focused mainly on American investments, or will you kind of invest outside of that?
I will go outside the U.S. I have one investment that's technically domiciled outside of the U.S., but really functions like a U.S. company. I've call it strayed outside of the United States. I mean, fortunately, I'm small enough that the U.S. market is quite fruitful. But I guess I would tend to stick to, call it, Western companies. I mean, another one of these mistakes that I made, maybe about 10 years ago now. There's this company in China called China Valves Technology. Alan Meacham actually owned a few shares. I don't know, you guys know Arlington Value. He's since closed up shop, but that was sort of like a net. This little Chinese company had any debt, looked good, turned out to be a scam. So I don't know. It's probably wrong that I haven't looked elsewhere, but that may be a fault of mine versus any kind of indication that it's not fruitful to look elsewhere. So if you have, I mean, I have a friend that his family's from China, and he has an insight into the Chinese, not only the language, but the culture and all of that, which help him. So I think you just kind of have to go where your strengths are.
Yeah, exactly. How have you found that investing helped you in just like your personal life? Like for me personally, like I found that since, I've become a value investor, I'd say, quote unquote, or just, I guess, fundamental investor, I've become just a lot more patient of a person, and just let things kind of, literally just let pitches go by me day by day. And I just not swinging for the fences on something that's down in the dirt. What has helped you, do you find, from investing?
I really like that question, Mitch. Those things you just said, the patience and all of that. But I guess also, I've studied a lot of the Stoic philosophy, sort of jives with me, and that, helps with investing, and then vice versa. But the idea of compounding, right? Knowledge compounding, just like money does. Just the idea of deferred gratification. I mean, that all of that, I think it translates over, and then even just sort of truth seeking, right? I mean, we're value investors. You're saying, do I understand this? Asking questions about it, almost a scientific method, if you will, or using first principles and trying to, at least for me, again, coming from that credit risk first mindset, trying to kind of kill things first and saying, like, how can this fail? Doing pre-mortems. I mean, all of that is decision logs even. I mean, of course I talk about it, but I haven't really implemented it in my personal life. Keeping a log or even just a mental note of your decisions and how you might be wrong, and maybe that humility too.
Yeah. Yeah. What were you, Jake? There's been a lot of things that have helped you in your life.
Yeah, it's kind of, I have to agree with both of you. It's kind of allowed me to look at things a little differently. Can't really think of anything in particular though that it's like kind of translated into my personal life.
Were you always an avid reader, Adam, before investing, or looking into fundamental analysis, or did investing kind of suck you into being an avid reader now?
Yeah, I've always, I don't know, yeah, I guess kind of looking back, I've always read a lot. Um, you can see one of my bookshelves here behind me. This is most of my business stuff over here, but yeah, just, I mean, biographies, and every now and then I'll go on, little fiction kicks. Like I just read, or actually listened to, the Foundation series. It was written like the 1950s. It's a sci-fi book. I think Apple's actually coming out with a, a series on it pretty soon. Isaac Asimov wrote those.
Okay.
I think Elon Musk pointed to those as a influence on him in his early years. But yeah, just I've tried to, just all over the place. I mean, I like history, just kind of everything all over the place. I really enjoyed the Alexander Hamilton biography by Ron Chernow. I don't know if you guys have watched the play, but the the musical was based on this book. The book is far better, at least in my view. Really get to see this statesman, the history of not only the United States, but the sort of the financial institutions that he put into place in the United States. I'm convinced, Hamilton would have been a really one of the top investors that we're talking about if he was around today. So
Yeah.
I'm all over the place.
Yeah, I haven't read up much about Hamilton, but I've watched a few videos on him, and just gone through a couple of things and articles about him. And from what I've heard, yeah, like he had a insane mind for financials, and he really is kind of like maybe not the father of banking in America, but he really did establish a lot for that. If I am familiar with that, I could be totally incorrect.
No, you're absolutely right. I mean, just he was the first Secretary of the Treasury of the U.S., and all these things that seem tangential but are integral. There was the guy that took over after him, Thomas Jefferson, of course, was diametrically opposed to Hamilton. When Jefferson took over as president, he said, basically, go find out what Hamilton was hiding, what he did wrong, and the then Treasury Secretary said it's a perfect system, like there's nothing wrong with it. So from taxation to the whole Federalist system to even the Coast Guard system in the United States to protecting U.S. ships and interests. I mean, all of it tied together to create this financial system that we take for granted today. But a lot of it, we look at, we talked about Mohnish Pabrai, being a shameless cloner. Well, Hamilton stole some of the ideas for finance from, say, the Bank of England. These guys just reached out and said, what works, what doesn't. Well, let's cherry pick the best of them. And so, we're talking about American history here, but it works just as well for investing, right? I mean, that's exactly what we're doing in the investing space. So there's so much to be learned from. I tend to filter my reading by sort of timelessness. So like I have on my shelf the Rise and Fall of the Roman Empire, written by Gibbon. That it's a massive six volume set. Reading about these historical figures. I mentioned some of the Stoic philosophers. Things that stand the test of time really are worth sort of digesting and going back to and rereading. And a lot of what's out there today is kind of just fluff or noise or marketing. And you really want to, even though I spend most of my day, in the investing finance space. I'd say if forced to choose, I would align myself more with Charlie Munger in terms of this broad-based worldly wisdom, trying to figure out how the world works. I mean, we look at investing and the stock market and business like an ecosystem, right? I mean, he talks about that. So all of these ideas sort of repeat in history and pop up in different forms. And in many ways, if we can figure out how the world works, that structure that it's built upon, it's something that can help us in all of our parts of our life, and not just the financial part.
Are you willing to be fully invested, or do you like having some cash on hand?
Yeah, it's a good question. I guess the preference would always be to have. I wouldn't target cash as a specific allocation, right? Like it's a byproduct. Because if something good's coming along, I should be buying it. I wouldn't want to pass on a great investment, Berkshire Hathaway at $200 a share. I'm going to say, no, I need to keep, this whatever percentage in cash. Like, I'm going to want to buy it. So, I think I'm okay having cash. I mean, I have some friends that say, geez, you should always be fully invested in, and that has worked over the last couple of years. Right. But, right now I'm I just bought a little something last week, but I was 20% cash, now maybe 15, 18% cash. But again, it's kind of a byproduct of not finding something else and keeping a very high threshold. I have a very concentrated portfolio, so that threshold to make a decision and to commit cash is pretty high. But generally speaking, I kind of subscribe to Buffett's notion of cash being an expireless option on every other asset class. I mean, if I have cash sitting around and, if it takes me 3 years to find something, and then that something doubles in 2 years, or 2 years to find it and doubles in 3 years, 5 years for something to double is a 15% return. I mean, and then extend that to 7 years and you're still getting a 10% return, which today, I mean, let's calibrate our expectations to where we are. 10% return going forward is a pretty good result. So, I tend to keep that in mind, but it also, again, just this patience, this punch card, Norbert Lu, there's another name for you. This idea of having a punch card really just resonates with me. And there's another good value investor in New Hampshire that I've just connected with, and he tends to run more of a diversified portfolio, maybe 20, 30 names, where I'm, 5, 6, 7, 8. So it has to work for you. And I think that's another just lesson. I'm kind of going off on a tangent here, but you can know what to do, if Buffett comes to you and says, here is the secret, you still have to get the power to the wheels, right? Like, you still have to implement it. It still has to go through your own psyche. So whether it's your temperament or your circle of competence, you have to be able to execute on it. And I think, Guy Spier, my friend Guy, talks about this a lot, about being your own true self. Warren Buffett cannot be Guy Spier, cannot be, Mitch Jensen. You have to be the best version of yourself. And I think if you can take time to really calibrate that, that will help you as an investor. So that was a long way from what I have as a cash position, but hopefully it wasn't too far. Thanks, Jake.
Do you have any books that you've read that have really changed your mindset on investing after you've read them? Like, what are some of the more, I mean, you've talked a little bit about the Greenwald books that you've read. Is there any other books that you've read lately or just in the past, 10 years that have really changed your mindset on investing? Or just life?
Bruce's books. I got the general notion before, but then once I read Bruce's books. I mean, it really just started to solidify and click. I just read. Poor Charlie's Almanac is a great one. Just this sort of general notion. I mean, if that's such a great framework for calibrating a lot of what we find in the investment world. But there's this book I just read. It's called The Intellectual Life. This guy was French. I think it was written in 1949. But a lot of it. I mean, so this is the 1940s, 1950s, and this guy's talking about minimizing distractions and too much information. I mean, it's all the same, right? But he's talking about finding wisdom and going about, cultivating wisdom and knowledge in a systematic way. Just this sort of reminder that, again, these sort of timeless principles, timeless ways of operating, removing the noise. And that was a nice reminder. I'm sure I'll think of a couple more here, but Deep Work was another great one. Have you guys read Deep Work by Cal Newport? That was a really good one for kind of eliminating.
I haven't, but I've actually heard some pretty good things about it there.
Yeah, that's a good one. Peter Bevlin's book, Seeking Wisdom. You guys read that one?
I haven't read it, but I know exactly what you mean. Yes.
Yeah. Yeah, you got to read that one. That's another gem. I didn't, he had another one. I even forgot the title. All I Want to Know is where I'm gonna die, so I won't go there. I didn't love that book, but his other ones are just timeless. Really, really good. Yeah, those books. What I did in my, and this is just sort of another small tangent here, but one of the first value investing books I ever read was Robert Hagstrom's book, The Warren Buffett Way. Yes. I've probably read that book like 10 times. Read it, listened to it. But what's interesting, and just another sort of sidebar here, you have to go back and reread these things like security analysis, reread these books, and you'll find that your perspective today, you're going to pick up different things from that same book in the future. And so you're coming at it with this whole updated knowledge base, which is so important. And I was going to say something and now I've forgotten it. We were just talking about books and shoot.
Okay. Well, I guess we could go into the book that you wrote, The Complete Financial History of Berkshire Hathaway, which is back there on your left, it looks like, or your right, our left. And I've read it multiple times already. I've already said. What made you interested in writing another book on Berkshire Hathaway, as there is, I believe, like over 50 books that they've read on, or that they've written on either Buffett, Munger, or Berkshire? Why is it that, I mean, I already know why, but I'm just asking you why exactly that you'd want to write another book on it, or why'd you feel that?
Yeah, if I worked for like the Wall Street Journal or something, or some financial publication, I was like, hey, I want to write a book about Berkshire Hathaway. Like, that idea would be shot down, right? Like, yeah, Chris Bloomstrand, who wrote the foreword for me, found at the Library of Congress, there's over 200 titles on Buffett, Berkshire, or Munger. And so you kind of have to be crazy to have that if you had a book idea. But I wrote it because it's the book I never found. I mean, you're the same way. I suspect, if you've starting to read my book for the third time, I just never found that chronological history of Berkshire. I just never found it anywhere. I mean, there were some really, really good books written about Berkshire and Buffett, but I just wanted that geek out on the financials, A to Z. Buffett would reference a number, right? And I'd go to the 10K and try to pull it out and say, okay, well, where did he get this number? And just spend a lot of time thinking about Berkshire and all these lessons that come from it. And it was sort of a product of my own mind too. Like I'm someone who, and if you told me that I was going to write a book, when I was your age, I told you I'd tell you you're crazy, because it's just, I wouldn't consider myself a writer, but just this logical, like, okay, I can break it down. It's got, over 55 years, but we'll just year by year. It just sort of made sense. And so I just started writing about it. I just had this idea. I kicked around a couple of ideas with a couple of people, and just started writing about it. Sent off the first couple chapters to Warren, and he gave me that bit of juice that I needed to continue going. And the result is it's now sitting on your bookshelf, which feels really good after 5 years of writing this thing.
I listened to the podcast that you had with Guy Spear, and forgive me if I'm wrong, but have you ever spoken to Buffett? I know that he's written to you before, but have you ever had a conversation with Mr. Buffett or Mr. Munger?
Yes and no. Technically, so my first year out at the Berkshire meeting, I shook his hand. I was in Borsheim's. He was coming around. I just stuck my hand out. He shook it. I went out to the Daily Journal meeting, I think in 2016. I got to shake Munger's hand, talk to him a little bit after the Daily Journal meeting as sort of part of a group. But I it's not, so I didn't have any kind of privileged access like Alice Schroeder did when she wrote The Snowball. It was really, I had some questions as I went along on Berkshire, but they either resolved themselves, or I thought it maybe not worth bothering Warren. He is just under, you guys know, he just has everybody reaching out to him. So I sent him the first 2 chapters in 2017. I said, hey, here's my idea. I want to start at 1965 as sort of the origin when you got there, go back 10 years and then work my way forward. And then he wrote back and said, I'm glad you're writing this thing. Wouldn't it be interesting if you went back to the World War II period? So of course, Warren Buffett is suggesting this. I'm going to do it. But when I went back to the 1930s, I said, well, geez, I'm close enough already. Why don't I go all the way back to the origins of every single predecessor company. So that's how that started. Then 2019, I came back from an annual meeting. I said, hey, and this is through Debbie, his assistant, said, hey, Warren, I'm almost done with this thing. Just wanted to let you know I'm still writing it. Do you want to read it at this point? And he wrote back again through her, but it was his words, saying, no, I don't need to read it now. Really looking forward to reading it. So I didn't have any communication with him in writing this. So much is out there that I don't think it's really necessary. There are a couple of questions I still have that I'd love to ask him, but so that was sort of the main meat of the book. And then at the end, Harriman House, I gave them my idea for the cover. And I said, I want Warren and Charlie's picture on it, but I sent it to Warren again through Debbie. And I said, Warren, here's my idea for the cover. Basically, you have complete veto power over all of this. Like I will not do anything that you're not comfortable with. And he was okay putting his picture on the cover, and then a little bit of back and forth on a couple of little minor things. And then I just asked him when we were going to translate it. Harriman House and I have found a publisher for the Chinese and Korean markets. I said, Warren, hey, any considerations for the international version? And he wrote back and said, basically like in another language, you never know how the tone or tenor is going to come out, but that's your problem, or he said something like that. So no real like phone conversations, anything like that. But it felt like I was talking to him, and I know that he got my questions and got my communications through Debbie. And then I got this nice letter behind me here once it was all said and done.
And from what I understand also is that he also gifted a lot of the executives or the board as well, each a copy of your book. Is that correct?
Yeah, so and I haven't posted this letter publicly. It's blurry enough behind me that you can't see it, but it basically says, thanks for writing it. You've done me a favor, and he ordered 20 copies for the Berkshire board and then invited me to sell it at the Berkshire meeting next year. Hopefully, knock on wood, we are in person, and I'll be at the Bookworm. So hope you guys are going to be out there too.
Yeah, that's what we're hoping for is that we get some time off from work and we're able to go down. And it's a long travel from where we are, but yeah, we'd love to make it there.
Mm.
You won't regret it. I mean, it's just such a phenomenal experience.
Yeah,
everybody's. I mean, as I wrote in the beginning of the book, there, it's really like being around 40,000 friends. Like everybody's excited to be there. You just never know who you're going to run into, and it's just a really, really fun atmosphere. There's something just so special about it.
Yeah. So just closing out on our conversation, do you want to just? Well, we're going to do a giveaway for your book. Do you want to just discuss a little bit about that, Adam, as well as how they can, I guess, enter the giveaway?
Well, geez, that's I don't know how you guys want to do it, but yeah, I'd be happy to personalize and autograph a copy or two of my book, and however you guys want to do it. I thought about doing a little giveaway for Watchlist Investing, but I can do that separately. But yeah, I mean, if you guys want to pick a name from a hat or have your listeners, comment or share and do it that way, I could, for those that are worldwide, shipping costs can be pretty onerous on a book that size. I think it weighs 2.5 pounds. So internet, I have some, free audiobook codes. If somebody, I don't know if you're in Indonesia or something, if you want, we could do like, a small chat with me, whatever you guys want to do. You guys are doing some really good work here with your podcast, and it's going to be fun to see how you guys progress and develop, because you're learning and teaching at the same time, which is a phenomenal way of going about this. So I'll leave it up to you guys how you want to do it, but be happy to.
Okay. What we'll do is we'll say, just check out our Twitters, mine, Jake's, and Adam's. We'll have an update there. And from what I'm guessing is that we'll just say, just subscribe to the channel and then just comment down below once you've done that. So then you can get entered in, and then we'll figure out exactly the giveaway and hopefully have a few winners.
Yeah, and I'll promote, if I'm not already subscribed to you guys on YouTube, the Oracle's Classroom is this website that I set up, sort of a companion to the book. I have a YouTube channel as well. But you guys can check that out as well. A lot of the resources that I found in my research for the book, I've posted on that site, and so you guys can, if you have any other material, I'd be happy to post it too. But book recommendations, kind of a blog. I haven't really been doing that much lately, but it's really an archive page, mostly of some good geek out on Berkshire stuff. So
yeah,
it'd be great.
Yeah, it's a great website, and also your YouTube channel. I mean, I've commented a few times on Twitter. A few of the clips that you have from the annual meeting, you're able to get a couple of good ones out there. They're great. So it's always a great watch, and we really enjoyed your daily vlogs that you had.
Day in the life, yeah,
like the day in the life of being a manager. We really enjoyed those.
Good. So. I appreciate that. Maybe I should do another one, another segment. I never know how that's going to come out. You guys probably know the name Gary Vaynerchuk. I've since sort of stopped watching a lot of his stuff now that he's got into NFTs and kind of all that crazy stuff. But I think he's a great marketer, and just this idea of like, hey, you don't have to try to, and I had that problem too, like trying to be perfect and doing all this stuff. And he's like, just put it out there, just do it. Tell how your day went. So I'm glad you guys liked that. And I'd be happy if any of your listeners have questions, if you guys, either directly or indirectly, get them to me. I mean, I can compile a list of questions. We could even do like another little chat here on YouTube, do something live and just answer some questions. I mean, I'm happy to share my perspective. It's just one perspective, but, building an investment management business, finding clients, how to invest. I really enjoy the teaching aspect of it. Is fun for me, and I hope to keep it going.
Yeah, I know Jake and I would definitely be interested in watching up how you started up your management business, and how you are able to manage money, and how you do it as it is separate accounts, as I think you believe you said beforehand. Yeah, I know Jake and I would be definitely interested in it, and I bet there would be a lot of other people that are interested as well. But we'd like to thank you for coming on today, Adam, and taking your time. If you'd like to shout out exactly where they can find you, and we'll put some links down below to those channels.
Yeah, so I've really embraced Twitter lately. And so my handle there is BRK_student. Watchlistinvesting.com. You can find me there. And then YouTube is The Oracle's Classroom, and also theoraclesclassroom.com. So if you want to find me, you'll find me one way or another. Certainly if people are listening to this show, you guys are going to post some links, and always happy to hear from people. I can't always, it's really been a challenge. It's a struggle for me to make sure I get back to everybody, but I really appreciate everybody reaching out, and try to answer every single inquiry, and really appreciate it. So this is great coming on here, guys.
Awesome. Thank you very much for coming on, and it's been great, and hopefully we'll be in contact there.
Absolutely.
Thanks, Adam.
Bye. Thank you for listening to this episode of Money Under the Mattress. If you have any questions about this episode, you can email us at moneyunderthemattress.podcast@gmail.com. Everything discussed in this podcast is our opinion and should not be used as investment advice. This podcast is for your entertainment and education purposes only, and we hope that you enjoyed it.